Venkatramani sir, 1 minute, 1 minute. You have to share screen
TV चालू है.
yourself.
I have to share screen myself. Okay.
Yes, one thing more. Glad to inform you that we are almost at 500 now.
Oh my
We
God.
are 499 as of this time. So a big clapping for Venkatramani sir.
Thank you so much.
And another thing, I had shared the PPT of Venkatramani ji on the chat mode. So anybody can download the PPT and use the PPT. But now, from this time, I hand over the proceedings to Venkatramani ji. He can share the PPT and continue with his deliberations. Everybody is muted except Venkatramani ji.
Yes, I'm fairly certain you can now see my PPT. Can one of you say yes or no? I think
yes,
yes.
It is there. Yes.
Good morning, everybody. I will start with two of the very, very senior past presidents, Sri P.C. Joshi and Sri Ganesh Purohit. I always believe that whatever I am today, or if I'm able to say a few words, the credit goes to Mr. P.C. Joshi. It was Joshi in 1997 who gave me an opportunity or a platform to speak on stock transfers in a CST regime. I think from then on, I have not looked back at all. So whatever little I know is the learnings that I have go through every time I meet very senior members and advocates who have been part and parcel of my life and along with my AFTP tenure. Ganesh Purohitji, yes, I had the occasion to serve as Joint Secretary during his tenure of presidentship. There are phenomenal learnings. His calm, his demeanor, etc. are some things which I take off from him. So Pankaj here, the most industrious, the most hardworking. I can't believe the way he kind of digitized the entire AFTP. I think that credit goes to him. I cannot take off. I see so many seniors here, many of them whose names definitely I know. I'm seeing that on the screen. Good morning to all of you as I start my presentation. Yes, our past president, who is my chairman for today, has already started off two controversial issues. One is relating to interest, which I will take it in the end because interest is something which is my pet topic. I will touch that in the end. And the second most controversial issue that he has talked of is credits. Whether it is after net off, you will have to pay interest on the cash portion that you pay, or whether at all that credit is available to you. I think these are two absolutely critical issues that I will be dealing, and I will not let you off without dealing with this. Now, if you look at the webinar that is in front of you, I have taken up some of the topics of interest. Those of you who think that I should touch upon some other issues, please put it in this question answer mode here. I will take it along as I come to the question answer session. The first issue relates to the concept of mutuality, one of the landmark decisions delivered by the Calcutta Club, by the Supreme Court in the Calcutta Club's case, followed by the Ranchi Club, etc. Now, I have had an occasion to examine this judgment in detail. Now, whether this Calcutta Club judgment will apply with full force to the GST law or whether it will not apply under the Goods and Service Tax law is a matter of debate. Whether the law laid down by the Honorable Supreme Court in the Calcutta Club's case can be extended to the GST law is issue number 2. If you look at the definition of business, 2 subsection 17, the Goods and Service Tax law takes within its sweep and ambit, the activities of a club, Now, considering the fact that the activities of a club are included within the definition of the term business, can every single club, including the Calcutta Club, be said to carry on business in a GST regime? And therefore, the law laid down by the Honorable Supreme Court will be for the pre-GST period and not for the post-GST period is a matter of concern. You leave this judgment aside for one moment. Dehorse this judgment. We will come back to this judgment sometime later because I know my two past presidents will take me on this issue. But nevertheless, I want to put the controversy on the table. Consider this case. I'm talking dehorse Calcutta Club decision. Remove Calcutta Club decision from your mind. Consider all the clubs that you have in your apartment complexes. You have clubs. Are these clubs for the members, of the members, by the members? In Bangalore, in Mumbai, in Jaipur, in Calcutta, we have clubs in these apartment complexes which are open to outsiders. When I say open to outsiders, you make an official, an honorary member. Before I forget, when I said official, I remember, I see some senior officials of the department who have logged in. Sir, my respects to each one of you. During the course of the session, if I am going to take either side, or department side or the SSC side, please forgive me for that. It is the law which will make me say so. I have no intent to hurt anybody. Now, come back to the point. When we talk of these clubs where outsiders are permitted to be part and parcel of these clubs as members, can you still say that these clubs don't carry on business, and therefore the law laid down by the by the Honorable Supreme Court in the Calcutta case, that it is by the members, of the members, for the members, would continue to apply? Consider a second case. I see so many clubs. For example, I find a club in Bangalore by name Karnataka Mountaineering Association. Its objects and its reasons say something else. It is an offshoot or a branch of the Indian Mountaineering Association. It is an offshoot of the Indian Mountaineering Association. They don't do anything by the club, of the club, for the club, or its members. What they do is they advertise in newspapers to take people for trekking. They charge an X amount of fee, retain a Y percentage there, and then continue to say that I am a club and therefore I will not be a subject matter of tax or subject matter of levy under the goods and service tax law. Let us examine this from 2 points of view. One, is there a business? You dehorse goods and service tax law for 1 minute. Touch your conscience and tell me, going on facts, is there a transaction of business? My answer is yes, there is business. Is there a transaction of by the members, of the members, for the members, by virtue of mutuality in some of these clubs where you have outsiders as members? The answer is no. Therefore, the GST law should apply to the to all of these clubs in full throttle. Now come back to the Calcutta clubs case, where the law is laid down by the Honorable Supreme Court. The law was laid down by the Honorable Supreme Court in the Calcutta clubs case, where the club rendered service or supplied goods. Please be careful. There are two classes of transactions: supply goods or render service or provide service. Supplied goods or provided service to the members of the alone. Therefore, can we now turn around and say where the supply of goods or the service rendered is not to the members, in such a situation applicable? I will be guided by two past presidents who are here.
Then out intent
I would be guided by two of the past presidents who are present here to let me know whether, even if there is a single member who is not a club member, then can you say that the transaction will be a subject matter of levy, or the entire club will be a subject matter of levy? Now let me look at these transactions where institutions that provided service to its members who came there regularly in the past, the manner in which these clubs are run are completely different from the way it was run. Therefore, my considered view is, while the concept of mutuality should be looked into, I would want every one of you to look into this concept of mutuality in respect of each club in isolation. You cannot apply the law with the Honorable Court in the Calcutta club's case by the same magic to say the moment you call yourself a club, you are not a subject matter of levy. Consider this case. We have badminton, we have tennis club, we have athletics club, we have that club, we have this club, where they carry on business in the form of training. Can you say that they are for the members? No. Members what come, members friends come, members guests come, they take in outsiders for the purpose of augmenting revenue. In each of those cases, my personal view would be that you have to dehorse Calcutta Club. Please look at the actual nature of the activity carried on by the business, carried on by the entity in isolation. Then try and apply the law laid down by the Honorable Supreme Court. No two clubs will be the same. Please be careful. The law laid down by the Honorable Supreme Court in the Calcutta Club's case, and probably even the other case of Ranchi, would be completely different. By the court in Ranchi is completely different from the manner in which these clubs carry on business. We need to take an absolutely considered view, and we cannot spin a web by saying clubs not liable to tax. In my view, I wouldn't think that would be possible. Now consider this slide number 2 that is in front of you. The law laid down by the Supreme Court hinged on these 4 or 5 bullet points that are there. It said the members perform the activities of the club for themselves. Can you say the clubs that are lined up today, the members perform the activities of the club for themselves? No. I have a badminton club in Bangalore. I have a tennis club in Bangalore where members don't perform the activities for themselves. In fact, it is run with a profit motive to augment revenue. It runs absolutely like a business. Therefore, the law laid down by the Calcutta Club, by the Supreme Court in Calcutta Club, cannot be extended to this business, is my personal view. Therefore, you have to decide the essence. What is the essence of the doctrine of the law laid down by the Honorable Supreme Court? If the law laid down by the Honorable Supreme Court is applicable to the club that is in your hands, on which you are deciding whether there is a liability to tax or not, well, it could be exempt. There is a good chance it will not be exempt. Now, what is an incorporated club or association? Now, incorporated clubs are in fact companies. These are companies which run. Private limited companies or public limited companies, not limited by shares, by limited members, which carry on business. To my mind, in respect of those entities, the law laid down by the Supreme Court in Calcutta Club's case will not apply. Go to that bullet point number 4, the doctrine of agency, the doctrine of trust, the doctrine of mutuality. Please take each of these clubs and answer the question. Is the club an agent of the member? Is the club a trustee, or is the member a trustee of the club? Is there a concept of mutuality that the club and the member enjoys? And is it qua members only? Only in such situations the law laid down by the Honorable Supreme Court will apply, not in all cases. Please be careful that I have a differing view on this. Senior members may look at it completely differently. Look at the 2 decisions that came from the advanced ruling authorities. I would want the past president, my past president, Joshi sir, to look at it. Look at these 2 decisions. I quite tend to disagree with the orders passed by the Honorable Advanced Ruling Authority. In the Lions Club of Pune, membership fee collected by the respondent, he says, will not be construed as consideration. It's not consideration. Registration fee collected from the member for its respondent will be construed as consideration against the supply made to the respondent. How different it is. I think the authorities here have made an error. They should say whether this is a club for the members, by the members, of the members, therefore there is no business carried on, therefore 2 subsection 17 will not apply, therefore GST laws will not apply. Leg 1. Leg 2. If they say, no, it is a business that is carried on by a Lions Club of Pune, then there should be no difficulty between membership fee collected or any other monies that are collected by any of these clubs. I think the Honorable GST authorities should look at this completely differently. Look at Rotary Club. Amount collected as membership, subscription and admission fee. Appellate Authority for Advanced Ruling in Maharashtra. They have said fee from members is not liable to GST. Why not liable to GST? Why not? Amount collected as membership subscription, to my mind, should be liable to tax. Now, some of these associations, I understand, have taken a position that they are charitable institutions under Section 12A of the income tax law. Please be careful. You may be a charitable institution for the purpose of 12A of the income tax law. That does not mean that you enjoy the benefits of 12/2017. 12/2017 notification under CGST says that even if you are registered under 12A of the income tax law, you have to fulfill the conditions laid down in the explanation below. That means only those 3 activities. One is that H1N1, 2 is mentally challenged, 3 is some services rendered for the purpose of whatever research. Only when you fulfill those conditions, you will be a subject matter of exemption. Please re-examine this. I have a completely different view in respect of these clubs. It is another matter that one part of the services rendered by the club have been exempt by the GST authorities. The other part has been a subject matter of levy. I don't think we are getting similar views from the authorities across India. To my mind, these will be taxable activities. Yes, it's a very strong view that I'm taking, but that is how the law is going to move over the next 3 to 5 years. Next, job work. I am sure, I don't remember, I think when I was speaking in Jabalpur, when my past president was actually the president at that point in time, when this issue relating to job work, so correct me if I'm wrong, and I think Nankani's uncle, no, I don't know, cousin, one of those Nankanis, I think Ishwar Vikram Nankani was my chairman. I was reprimanded by him at that point in time. I think that was in 2018 when you were the president. I took that quite lightly. I said, all right, but look at how the laws come now. I want to call up Vikram and tell him what I said in 2018 is actually true. This is what the government has done. Now this job worker is a very peculiar man so far as I am concerned. I have a big problem with this man called job worker. Now I have, please don't look at me differently. While I have all the respect for the job worker, I am only talking of how the law is behaving towards this man. I have no other, nothing else in my mind. Now this job worker is somebody who I don't trust. His business is controlled by the principal. His purchase is controlled by the principal. His supply is controlled by the principal. His manufacture is controlled by the principal. His machinery is controlled by the principal. His tooling is controlled by the principal. Nature of supply is controlled by the principal. The way he processes is controlled by the principal. His shop floor supervisor is controlled by the principal. This man is controlled by the principal. Why should I not call this man in the first place a related party? A related party. To my mind, he is a related party of the principal. The entire principles of valuation under 15 subsection 3 will apply with full force so far as this job worker is concerned. When I was talking about this in the Jabalpur conference, a note was sent to me by Mr. Vikram Nankani. He said, Venkat, you have actually forgotten the law laid down by the Honorable Supreme Court in Ujagar Prints case. It is not a case that I don't know Ujagar Prints. I am aware of Ujagar Prints when I am making the statement. I am making it with full responsibility. Ujagar Prints case was a completely different set of facts. The manner in which the job worker is working today is completely different. As I said earlier, this job worker is controlled by the principal, completely controlled by the principal. Therefore, he is a related party. Now, the word process, the word manufacture has been a subject matter of debate enough and more. Enough and more. What is process for Mr. Purohit sir is manufacture for me. What is fabrication for Praful Joshi sir is manufacture for me. Neither process nor fabrication can amount to a manufacture. In a different example, if I take you. Therefore, manufacture takes within its sweep and ambit process and fabrication. Process does not take within its sweep and ambit the concept of manufacturing. Therefore, the notification that has come now, in fact, the circular, I'm happy that this circular has come. Even now, people are committing mistakes. Manufacturing services on physical inputs owned by others. Consider this example. Let us say Ganesh Purohit sir runs a printing unit for the purpose of this. So please, I know you are the past president. No, I'm not undermining you. But for example's sake, let us assume that you are running a printing unit. Let us assume that you are printing on corrugated boxes for Unilever. You will put that surf emblem. You will manufacture in cartons of 10s, 20s, 100s, gross, call it by whatever name. Can you tell me whether it is manufacture or whether it is process or whether it is plain and simple printing? Whether it is plain and simple printing. If you say it is printing, you are liable to tax at the rate of 5%. If you say no, it is not printing, but it is on corrugated box, you will be covered by chapter 4904, you will be liable to tax at 12%. If you say your manufacture, you will be stuck with 18% as per the circular and notification. You will go back to HSN 9988. Now, consider this fact. Consider this fact. This entire process of printing under excise law was considered to be manufacture because it was meant for one particular unit and excise duty at the rate of 6% was levied. The same entry has got extended into the goods and service tax law. Now, when I sit back and think, what is different? Nothing. Ganesh Purohit ji was considered as a manufacturer under old law where he paid 6% excise duty on the same job that he did. Now today, you suddenly cannot be a printer and therefore a service provider, therefore you are a works contractor, therefore you are liable to pay under 4904, either at 5% or 12.5%. Sir, I know my past president Joshi sir has fought enough number of cases on works contract. I am still not convinced that what I am going to say will be accepted by all of you. Go back to Rainbow Color Labs case 124 ST. The Honorable Supreme Court said that even if there is an iota of material that will amount to works contract, those goods which are transferred will be a subject matter of levy. How different is this? If the paper is supplied, in my example in the Ganesh Purohit sir's case, if the cardboard is supplied by Unilever, whereas the ink, the staple pins, the adhesive, the gum tubes, etc. are purchased by you. Should it not be a service? Should it not be works contract? Should it not fall under 2 subsection 119? Should it not be taxable under the residual entry under 9997 at the rate of 18%? Why has this notification come here? This notification has come here for 2 reasons. Reason number 1, they are now slowly drawing a distinction between works contract and job worker. Job worker means a treatment or process undertaken. Why? Is printing of pamphlets not works contract? Is printing of question paper not works contract? What is so different about it? Why do you want to treat this man as job worker, somebody else is a works contractor? Are you delineating? Are you demarking? Are you getting this man called job worker into manufacturing services on physical inputs owned by others? Now, in the example that I gave you, Purohit sir, because cardboard is given, physical inputs is given by Unilever, you have to pay 18%. Under world law, you would have been a works contractor where you could opt for payment of tax under composition and pay tax at the rate of 4% or 2% depending on the state in which you operate. Your business has not changed. Business is the same. But these people are now creating a controversy. Consider a second case. The entire Bhiwandi area of Maharashtra is all in textiles. Can anybody with authority tell me, is it a works contract? Is it a printing? Is it a job work? Or is it a manufacturing service? I will bet my last rupee on it. Even the senior officers of the government who are present here will commit an error if I start fighting with them by saying, oh, this is manufacture, that is not a manufacturer. If you put a design on a fabric, it becomes manufacture. If you just print it in blue color dye, it becomes a job work. How can it be? It cannot be. If you simply put a design, it can't become a manufacture. If you dye it and take it out, it cannot become a job work. All are works contracts where there is a transfer of property in goods from one person to the other. To my mind, they must all be 2 subsection 119. This concept of job work was the concept that was prevalent under the old law that has no business to come under the goods and service tax law. Consider a third example. Most of the pharma entities enter into leave and license agreements for the purpose of manufacture of the what is it called, tablets, pills, bottling, etc. Are they job workers? Are they manufacturers? They were paying excise duty under old law. Can they become job worker today? Simply because they treat or process, because they process the tablets. They don't manufacture the tablet. If I take this argument, then Ganesh Purohit sir will come and tell me, no, no, no. Manufacture means, you know what? It must become a commercially different commodity after undertaking of the process. Textile remains a textile in my previous example. Nothing happens to it. Nothing happens. What have I done? I've just taken the textile, dyed it into blue color, brought it out. It continues to remain a textile. Nothing changes. Nothing changes. Simply because I have converted raw material of paracetamol into paracetamol tablet. It doesn't become a manufactured commodity. Lot of other activities need to take place for it to become a manufactured activity, including its testing for it to be ready for the market. Only then there can be a manufacturing service. Therefore, please reconsider this job work. I think the government is going to create a huge amount of litigation going forward. Now, this remuneration of directors. I think this advance ruling of Madhya Pradesh is a big issue. Somewhere I think the government has lost its sense of balance. One. Two, I think it is their anxiety to collect revenue. 2, 3, or they don't understand business. This is the problem. That is why they put you into controversy every time. And this advance ruling authority, I don't trust that advance ruling authority any longer. Because to my mind, they are only 18% cases. They have never given a ruling where the entire business under old law was considered to be the same. They have never followed that. Now I will give you 2 examples for that. 2 examples. Example number 1. We will come to this remuneration part of it later. If you look at the advance ruling that came from Mumbai in Giriraj Renewables case, 1, I am sure my past President Joshi will agree with me that a transaction of works contract in respect of solar products was completely viewed differently by Mumbai itself in 2 different advance rulings of 2 different companies. What is going wrong? I have no idea. They have either lost sight of the business or they have lost sight of the issue. They are only looking at tax and therefore giving you this advance ruling. Consider this case of remuneration to directors. This man called director is sitting in the factory or sitting in the office on a daily basis. He is getting salary as salary. It is subject to TDS under 192. It is subject to professional tax as required under the Profession Tax Act. The man is an employee of the company. His terms of employment say that he is a whole-time director under 2 subsection 94 of the Companies Act 2013. And therefore, you will be paid a salary for your services rendered to the company. It is just that he is called a director. Therefore, it is called director's remuneration. If this man were to be called vice president, it would have been called salary. That's it. So, if I nomenclate this director's remuneration as salary, would the government think otherwise? Would the government think otherwise? That is my question. So, it satisfies all the conditions of salary. It satisfies the deduction of TDS. Even in the income tax return, what this man gets is shown as salary under the head salaries and whatever, under section 17. Now, TDS is deducted under 192. It is shown as remuneration under the Companies Act 2013. Despite all this, you get a ruling saying that director is supplying services to the company. Can I say the Joint Commissioner who is sitting here is attending this conference and supplying services to the government? What is wrong? There is something wrong in this thinking. I think this thinking has to go. The government has to think how a business thinks, and government cannot think just to collect revenue. Now, both of these, Claycraft Industries and Alcon Consulting, to my view, to my mind, have to be looked at differently. Now, in Alcon Consulting, they have said that it is liable to tax because they have said director is not an employee of the company. What is wrong with them? Simply because he doesn't sign an attendance register, it doesn't become an employee of the company. Something wrong. Here they say in Claycraft Industries, directors are not employees of the company. In the instant case, director is a supplier of the services. What service he is rendering? He is working there morning till night. He is signing vouchers, he is signing contracts, he is taking care of business, he is going to the shop floor, he is meeting customer, he is doing everything that every other employee does. Therefore, to my mind, this is wrong. I would advise the government to look at two very, very important issues. Those of you who handle income tax will know AIR 489, 1977, CIT versus Chidambaram Pillai, where the Honorable Supreme Court brought in a beautiful distinction of what is a salary, what is remuneration, what is service. If this is not enough, I would advise the government and its officials to look at Nani Palkhiwala's book on income tax, where the master-servant relationship has been dealt with at length. Nothing has changed from the time the great Palkhiwala wrote that piece in that book called Income Tax Commentary. And now everything is the same. So please look at it before you take these decisions. I, with respect, disagree with this law laid down by the Advanced Ruling Authority. I will continue to claim exemption in respect of directors' remuneration. I will take this fight to the next level. Next, all these are remuneration to directors. Under service tax law, they clarified it is not liable to tax, but under GST, it became liable to tax. I don't know what is wrong with this form. Now consider this example. Now look at these advanced rulings that have come here. Now, somewhere somebody doesn't know business. This is what I am telling you. In a series of advanced rulings, the entire understanding of the transaction is completely lost. Now look at the two transactions that are there on your computer screen or on your mobile phones. The first one, please understand the example very clearly. Supply of medical equipment. Please be careful. Supply of medical equipment without consideration. Medical equipment is supplied by the company. No consideration is charged, but the contract says the consumables you will have to buy from me. That means you have to buy reagents, consumables for this medical equipment from me at the price we determine now for 3 years. Then the machine is free. This is the issue. This is the transaction. Equipment is free. You have to buy consumables from me for 3 years. To give you an example, if I were to tell you, sir, this computer, Ganesh Purohit sir, this computer I am giving it to you free, 3 years AMC you have to come back to me only, and the price we determine now. Right? Computer will be yours after 3 years. AMC is mine. Now, this is the fact. This is the example. Now, in this example, two questions arise. One, whether the supply of medical equipment is liable to tax. Be careful. They are two unrelated parties. They are not related parties. Venkatramani and Ganesh Purohit sir are two unrelated parties. We have not seen, there is no ancestral connection also. We are unrelated parties. I'm giving computer free to you. That means I'm giving the equipment free to you. But the only tag on condition is you will have to buy the AMC services and other spares from me for 3 years. This is the arrangement. Now here, the Advanced Ruling Authority says, in the case of Abbott Health, whether the supply of medical equipment is liable to tax. Be careful, he has not yet come to reagents. Whether the supply of medical equipment is liable to tax, the first appellate authority, Advanced Ruling Authority said yes. So the man went to appellate authority for advanced ruling. Appellate authority also said yes, it is liable to tax. Third, man went to the High Court. High Court remanded back. High Court remanded back to re-examine the transaction. Now, great respect to the Honorable High Court. I think they could have decided the matter in very simple terms. There was no need. It was an issue relating to law and factually misunderstood by the lower authorities. Decision could have come. Now we are still before the appellate authority, advanced ruling authority. It is now 2.5 years. There is no clarity on this situation. Two unrelated parties, supply is free, no liability to tax, reverse input tax credit. Chemicals and reagents subsequently sold, it is a supply liable to tax as CGST, SGST or IGST depending on the nature of the transaction. Now look at the second part of the example. First part was medical equipment was given free, reagents were sold to Ganesh Purohit sir. Second part, will supply of medical equipments and reagents would qualify to be a composite supply. Now in the second case I am saying, you Ganesh Purohit sir, you buy computer from me You should also buy AMC, spare parts, ink, everything from me. Everything from me. Then only I will give it to you at this price. Computer plus service. You have to buy both. Does it become a composite service? Because this company wanted to take advantage of the lower rate of tax in respect of medical equipment. Services would have been a subject matter of levy at 18%. Medical equipment would have been liable to tax at the rate of 12%. Now here, what did the advanced ruling authority say here? They completely misunderstood this. Will supply of medical equipment and reagents and consumables under a contract, because reagents and consumables are at a lower rate here. Medical equipment is at a higher rate. They said, yes, it qualifies to be a composite supply. Second, the appellate authority of advanced ruling also said, yes, it constitutes a composite supply because they wanted a higher rate of tax. Nothing happened. Transaction is the same. I have just asked you two questions. I'm giving free reagents. I'm supplying at an X price. Second, reagents plus equipment I'm giving. So will it be a composite supply or will it be supply of equipment? Look at the advanced ruling in Randox's case. In Randox's case, Karnataka is telling it is not a composite supply. Kerala is telling it is a composite supply. Somewhere down the line, we are missing the hay for the needle. Now, if you look at any product, you forget this medical equipment. You take car, it is a composite supply because 1 year warranty is free. 1 year maintenance will be free. Therefore, if you are going to look at that, how can this not be a composite supply? I am completely lost. I am unable to understand what the thinking of the advanced ruling authority is. Now, this is the irony of fate. I don't know why people are still going for advanced rulings or why people are going for clarifications. I completely fail to understand because this government has completely lost sight of the business. They don't know business. They are just giving clarifications left and right. At least when it was a state level levy, I could go. Joshi sir could run to the commissioner and say, sir, you have not understood the transaction. Get a rectification, get a clarity. But here there is nothing we can do. Now look at this, gifts or vouchers. Consider this case. Ganesh Purohit sir will go to shopper stop in Jabalpur. Let us say he goes to a shopping mall. He goes to a shopper stop in Jabalpur. He pays 5,000 rupees to shopper stop and buys a gift card. This gift card, he gives it to Joshi sir as a present. This is all is the transaction. He goes to a mall, he buys a gift card. That gift card is given to the past president as a gift. This is all. The entire transaction that I have written here is the same thing. Now, these people say, is this gift card taxable? They say the answer is yes. As if that is not enough. You look at how the government is clarifying this. It is clarifying it completely differently. What has Ganesh Purohit sir done? He has paid 5,000 rupees. He has got one letter, piece of paper from that shop saying that you have paid 5,000 rupees. This is gift. This is transferable. You can give it to whoever you want. Whether such vouchers are actionable claims, they say no, it is not an actionable claim. But they say whether they are prepaid instruments, they say yes. So if it is a prepaid instrument, then it comes under the Payments and Settlements Act 2007. They say it is cash not liable to tax. But look at how they are taxing you. They are telling you if this gift voucher is given as a piece of paper, then it is liable to tax under Chapter 4911 at 12%. But if this comes as a smart card, because you give 5,000 rupees, Purohit sir, Joshi sir need not use this 5,000 in one shot. He can use 2,000 rupees once, balance 3,000 will remain. So what they do, these firms or companies now give you smart cards with 5,000 rupees loaded. Once it is purchased full, this card is taken back. Then again reissued after loading 5,000 rupees currency. So they say it is a prepaid instrument, not liable to tax. But they say it is a prepaid instrument. Yes, they say, but they say you pay tax. So if it is given in paper form, it becomes liable to tax at 12%. But if it is given in, let's say, once credit card form, it becomes liable to tax at 18%. What is wrong with these fellows? I have to bang my head to a wall. That's it. Nothing else I can do. This is how advanced rulings come out. So what entities have now started doing, they are giving it on letterhead. They have said, I don't want to do anything. Sapna Bookstall is giving on letterhead. Now, second time you go, he has a pre-printed letterhead. You can buy only for 2,000. Then he says 3,000 is left over. He'll put one seal and give it back to you. You can go and exchange it anywhere in India. Again, you want to avoid this 6%. What is wrong with this government? Have they lost their sense of balance? Somebody doesn't know business, or somebody doesn't know what the question is, and therefore they are answering it like this. I'm sorry if I'm putting the department down, but I think this needs to be reconsidered. The worst part is, this man has not even gone on appeal. He's happy with this advance ruling. He's happy with this advance ruling. Next. Now, in respect of these transactions relating to manufacturers, I have a problem. I have a problem. Now, most of these manufacturers in Mumbai, if you see, in the Vikhroli area or this manufacturing belt, they're all hardcore manufacturers. You have Godrej, you have L&T, you have somebody else who are all manufacturers. Now, all of these entities go in for tooling. They go in for tooling. Tools, jigs, dies, fixtures, etc., etc. They go in for tooling. Now, in respect of these toolings, two advanced ruling authorities came. One from Tamil Nadu, one from Maharashtra. Now, look at the Maharashtra advanced ruling. The Maharashtra advanced ruling says, if the ownership of the tool is located outside India, ownership of the tool, please be careful, ownership of the tool located outside India, and it is transferred without movement of such tools. That means you manufacture a tool in Vikhroli, keep it there only, but the transfer of ownership takes place somewhere else. In such a case, the goods supplied on an out and out basis, as in the present case, there is no levy till the time of customs clearance. This man will not customs clear. Then what will happen? If he doesn't customs clear, what will happen? Because tool is already in India. Which man will go to customs authority and say, sir, it is here only, money is paid there. Should you treat this as a transaction of import? Therefore, I will pay IGST. I think they've got this wrong. Next, look at the second part of it, the Tamil Nadu advance ruling. It says, transfer of title in molds to another person within India involves supply liable to GST. Now, the question was just tweaked. First one, he said both the supplier and the recipient are outside India. In the second one, he said both the fellows are in India, where the mold is continuing to stay in India. Without movement, the title gets transferred. Therefore, one is not liable to tax, other is liable to tax. I can't understand this logic. I cannot understand it. What is going on? Consider this third case. Mumbai and Rajasthan are the culprits in the third. Sorry, I use the word culprit very safely. They are the litigants in this case. Royalty paid to the government for extraction of minerals, not mines. Please correct that. It is minerals. For extraction of minerals. You pay government in two forms. One, when you enter into a license agreement with the government for a 10-acre piece of land where you can extract iron ore, where you can extract coal, where you can extract bauxite, limestone, lignite, call it by whatever name. Then there are two transactions that happen. One, the government grants license under the Mines and Minerals Act 1957. They grant you license. For the purpose of grant of this license, there is a fee that is paid. There is a fee that is paid by the recipient to the government. Whether this transaction would be a subject matter of tax under reverse charge. Can it be said that the government is providing service to the lessee for taking this mine on lease? Can it be said that this mine is on lease? If they say that this mine is taken on lease, Yoshi sir, I want to argue saying that it is an immovable property. Please be careful. It is the lease of an immovable property. What is taxable under goods and service tax law is only movable property. The moment it becomes immovable, it is not liable to tax. Then leave and license of immovable property, you have to take me to Schedule 2. You have to take me to Schedule 2. Where Schedule 2, it is only land and building. This land and building as understood in entry to schedule 2 is different from land as considered for the purpose of mining. They are different. Therefore, I will not pay tax. Therefore, they have not questioned that. They have said it is an immovable property. You don't pay stamp duty because the property belongs to the government. It is one of the rights. Please be careful. The government is not giving you lease of land. The government is giving you only the leasing rights to mine the minerals in the land. It is one of the rights in a bundle of rights that the government transfers. Now, I can take two arguments, Joshi sir. Purohit sir, I can take two arguments. One, can you say that if I pay 1 crore to the government for a 5-year lease for 5 acres of land, 5-year lease, 5 acres of land, 1 crore, it is a lease of an immovable property not liable to tax. Option 1. Option 1. I will answer that question. Option 2. Can you argue that no, it is not the lease of land. Therefore, you won't fall under Schedule 2, Para 2. Because it is leasing of land and building. This is not leasing of land and building. This is the right that is given to exploit minerals. After 5 years is over, this land will go back to the government. This land will go back to the government. But what would I have done? I would have created a huge pit here by removing the limestone, lignite, dolomite, bauxite, call it by whatever name. This is what I would have done. So the government is not on that levy. The government says the royalty that you pay monthly. How is this royalty computed? This royalty is computed depending upon the mineral that is extracted. If you extract limestone, you pay only 5%. Whereas if you extract iron ore, you pay at the rate of 18%. This royalty is paid to the government. Mumbai and Rajasthan are in the forefront. The Mumbai bench, sorry, the Goa bench of the Mumbai High Court. The Goa bench of the Mumbai High Court held in the Association of Mines case that this royalty is a tax. Because there are two. First is the license fee you pay. Second is on every extraction you pay at a particular rate. This itself is a tax. Therefore, there cannot be service tax on royalty. It was under the service tax regime. Now, they have come on GST. They have said, no, this royalty that you are paying is a service that is rendered, pay tax on reverse charge basis. I am saying that royalty itself is a tax. I am paying tax on a quantum extracted at its market value, which is the selling price based on the invoice that I generate on a month-on-month basis. On that tax, where can be another tax? There cannot be another tax. Yes, I know I have only 10 minutes. Yes, I will quickly finish. So on that royalty, there is no liability to tax. This was the Mumbai bench. Matter is lying before the Supreme Court. State has gone on appeal. The Rajasthan High Court said that in the Union of India versus Association of Mines, the Rajasthan High Court said, yes, there is a service here. The royalty is service. That matter is also lying before the High Court. I am saying, where is the service? The assessee is paying tax on what he has extracted. Government has not rendering any service. The service part is over with the license part. Service is over. If there is a service, it is there. But on the tax that I am paying, there can be no liability to tax. Those of you in Mumbai, sir, in Jabalpur, it is happening, those marble cases. Please be very careful. Some of them have already been issued notices. Now, let us go to the Safari Retreats case, where the Orissa High Court said that the input tax paid on inputs, input services, and capital goods for the construction of an immovable property, you can claim input tax credit. Across India, there are several writ petitions claimed. I am not on that point. But I am on a different controversial issue here. Those of you who have got the statute book in front of you, who have got the act in front of you, please look at the wordings, and please look at these wordings very, very carefully, very, very carefully. Now, the government can turn around and say, it is a drafting error. Let them say it. Then I will tell you what what my argument will be. Now, what this government has done, please look at 17(5)(c).
Sir, Venkat sir, 1 minute.
Yes, sir.
You can continue till 12:15, sir.
Oh,
you have 15 minutes. And
Thank you
I
very
would
much.
request everybody not to write anything on the PPT. Please don't write anything on the PPT. Please. Sir, you continue, please. Sorry to interrupt.
Yeah, thank you. Uh, now consider the wording of the 17.5c. In 17.5c, please look at the statute book very, very closely. 17.5c says, works contract services when supplied for construction of an immovable property, within bracket, please be careful, very important, other than plant and machinery. It says plant and machinery. Now you come to 17.5d. 17.5d. Now, goods or services received by a taxable person for construction of an immovable property other than plant or machinery. Sir, in 17.5c it is and, in 17.5d it has become or. What? Or. Now, whether this is a draftsman's error or whether this is intention of the statute, I am saying it is an intention of the statute because it is passed by the law ministry, it is passed by 2 houses of the parliament, it is gazetted, it is statute, it has come out by way of an act. Now you can't say there was an error, there was a printing error. I will tell you why. Because you come to explanation. You come to explanation to section 6, subsection 6 of section 17. There he says, for the purpose of this chapter, which chapter? For the purpose of chapter 5 and for the purpose of chapter 6. For the purpose of chapter 6, plant and machinery means. Now, Puraj sir, please pay some attention. First he said plant and machinery in 17.5c. Then he said plant or machinery in 17.6. Now for the purpose of explanation, he is saying plant and machinery. Therefore, the intent of the legislature was only plant and machinery. It was never plant or machinery. It was not there. If it was plant or machinery, in several places in the statute book, they have used and or are. They could have said and or are here. Now, I took up this matter with the Principal Additional Commissioner, Mr. Nagendra Kumar. I am using the name. Please go ahead. I took it up with the Principal Additional Commissioner. The Principal Additional Commissioner tells me, now the past president's effort needs to come in. They say this and or are should be interchangeable. Huh? How can it be? It cannot be. If I say Purohit sir or Joshi sir, it means something else. If I say Purohit sir and Joshi sir, it means something else. You can't say both are interchangeable. If I tell you Purohit sir and Joshi sir should meet me only then it means something completely different. Now here, the Principal Additional Commissioner says this or and should be used interchangeably because the dictum of this or should be understood as and the dictum of and should be understood as or. That means everywhere where there is or, let us read as and. Everywhere there is and, let us read as or. Because that is the dictum. That is what the Principal Additional Director General says. It cannot be a case. Now, what is the problem with this? Now, assume, what is the problem? The problem is this. Now, if you read 17.5d further, he says, goods or services, I'm reading 17.5d, goods or services are both received by a taxable person for the construction of an immovable property other than plant or machinery on his own account. Now, in the advance ruling that is below, it is coming next, where this is the advance ruling. Yes, this is the advance ruling in Tarun Realtors case, Karnataka, where they have interpreted that this and should be or and or should be and therefore the explanation is for both. I am saying, how can it happen? It cannot happen, because if I go back to 17.5d, he says construction on own account means you cannot subcontract. I told him, sir, you look at agriculturist. Cultivation by using own labor means father, mother, brother, sister need not go take the plow, take two bullocks and start plowing. No. Cultivation on own account means by employing one's own labor or somebody else. So here he says in 17.5d, if you use subcontract services, you will not get credit. Whereas in 17.5c, only subcontract I will give you. And look at how he is differentiating plant and machinery. The question that he is asking here is, Purohit sir, are you by yourself on your own account installing this chiller air handling unit? Then I will give you credit. But if you use an agent to put up this superstructure, I will not give you credit. This is absolute madness. Absolute madness. This is where I am saying, I think somewhere the government has lost its sense of purpose. It has lost its sense of purpose. This is where we have to be extremely careful. Now this word and this word are, we will have to be very, very careful of how we deal with these transactions, right? Now, one other issue here. Now in this advanced ruling authority, with the slide which is on your table, the advanced ruling authority says in 1750, chillers, air handling units, elevators, escalators, water treatment plant, etc. can be contended as plant and machinery. He says, yes, this is plant and machinery, but input tax credit I will give you only if you yourself construct. If you give it as subcontract, I will deny you input tax credit. He says 1750 I will deny, even if they are plant. He's agreeing their plant. He's agreeing their machinery. But he says, I will not give you credit because you have taken the subcontractor's route. If you have done it on your own, I will give input tax credit. Now consider a case. Look at how we can carry this forward. I will tell all builders who are with me, saying, construct on your own. There is no need of employing subcontractors. Then the purpose of 1750 and 1750 is lost. Is this what the government wants? If this is what the government wants, this is how the advanced ruling authority will work upon. This is where the difficulty in interpreting and understanding the laws. While they are agreeing that it is plant and machinery, they are unwilling to give you credit because you have not constructed on your own account. They say construction of an immovable property on your own account means Purohit sir only has to go and keep one brick. Joshi sir only has to go and handle this DG set. You can't use outsource. If you outsource your gun, please read this advanced ruling. It looks silly. It looks silly. I'm sorry if I've felt demeaned the departmental officers, but I want it to be that way. Now look at this controversial issue on plot development. Karnataka and Maharashtra pioneer litigation. We are the pioneers in litigation. Now we create trouble where there is no trouble at all. Where there is no trouble. Now look at this case. Sir Joshi sir, you have taught me from 1997 that land is an immovable property. Don't talk tax. Don't talk tax. This is a fact. Years together, courts have agreed that on land there can be no tax. Agreed. I am also fully clear that on land there can be no tax. This is the fundamental principles of indirect tax laws. Those principles have not changed. Even in goods and service tax law, it is only goods and service which can be a subject matter of levy. Immovable property is outside the purview of GST law. Land, therefore, is outside the purview of GST law. Building, therefore, is outside the purview of levy. Now, look at how these people are getting back at us. That is what hurts me. That is what hurts me. Now, you want to call this as a draftsman's error, or you want to call this as intentional. That is where I have a problem. I have a problem. Now, the government wants to create litigation, sit on top of it. Now, here, what they have done in marquee spaces. In marquee space, what was the facts of this case? In marquee spaces, let us say Pankaj Gia, who is the landowner, and Venkat, who is, let us say, the developer. Pankaj and I entered into an arrangement to say, listen, Pankaj, you are the landowner. I will develop this land. I will develop this land. I will develop this land into 30, 40, 40, 60, 50, 80 sites where I construct roads, culverts, bridges, tanks, telephone poles, etc. Transfer it to the municipal authority of Jaipur because it goes to the municipal authority of Jaipur under the land development contracts. The rest of the site, we will sell it together. We will sell it. 1/3 belongs to you, 2/3 belong to me, or whatever ratio. Now here he says that is liable to tax. Revenue share is liable to tax. He's telling it is service. You have acted as a contractor for Pankaj Gia. I am saying Where have I acted as a contractor for Pankaj Gya? We are selling it together. I am saying 1/3 is mine, 2/3 is yours. I am selling 30-40 site to Purohit sir. I am selling 30-40 site to Joshi sir. 1/3 is yours, 2/3 is mine. I am selling land. He says, no, this is actually service that you are liable to tax. Landowner is not liable to tax on 66%. Now, I cannot understand. A revenue share arrangement is one where for an activity, the profit is shared between two people. Can you say that this profit is a subject matter of levy? Or can you say that this consideration received towards sale of immobile property, which is land, is a subject matter of levy? Now, I don't agree that this is a subject matter of levy, but unfortunately, that is the marquee spaces advance order. Now, consider this problem here. The problem doesn't stop here. I think the government has not seen the difficulty. Go to 3/2019 notification, where the entire issues relating to works contract were a subject matter of tax. That is a proviso-driven notification. There are 14 provisos. Proviso is the charging section, proviso is the exempt section, proviso is the rate section, proviso is everything, proviso is law. Now, when you go to explanation to the fourth proviso, he says, other than plotted development. Now, my belief is that they have cut and pasted RERA Act. They have cut and pasted RERA in that notification. They have forgotten to remove this plotted development there, because in all other places they have removed. I can prove it to you. Wherever they have cut and pasted, they have removed land. But in this one single line, that plotted development continues to exist. Now, whether that is a mischief, or that is an error, I don't know. But if it is a mischief, this advance ruling is correct. It is correct. But if it is intentional, then I think we will have to take the government to task. Or is it a draftsman's error? Is something which we will have to see. Because if you are a land developer, you are not required to register under RERA. Therefore, you are not liable to tax at all. This is the difficulty with these advance rulings. Sir, I will come to this interest on delayed payment in the end. I remember that. I still have 4 minutes left. I will come to it. This notice period, I will not. This is a very simple case. I don't know what the government is fighting on notice period. I don't even want. Now, sir, in all these notifications, I know there are hundreds of practitioners who have logged in today. But I think there is a tremendous mischief in these notifications. Now, again, I don't know whether this is intentional or whether it has skipped the minds of the draftsman. Please be careful. They have given you time to pay your tax till, I don't know, whichever month, on payment of 9% of interest. First 15 days, no interest. On or after 15th day, you pay 9%. All of this is there. There is no difficulty. But where is the due date for extension of filing the return? No. They have only talked interest. They have said, if you pay after so-and-so date, 9% interest. If you pay before so-and-so date, 9% interest. If you don't pay before 27 June, then you pay 18% from day one. All of this I understand. Where is the return? That means return should I file on 28th? Will the website accept? Will it accept? There is no extension for delayed filing of return. Only for payment of tax and interest is there. Now, I don't know whether this is missed out, intentional, unintentional. The government wants the return to be submitted but not filed. Should it be saved so that tomorrow they don't allow you to change it? Or therefore they'll say, no, original return was this, subsequently so much, therefore interest, therefore fraud, all of this. Please pay attention to this. I am not seeing any extension for delaying filing the return. I think AIFTP should concentrate on this. Only in respect of payment of taxes you have. For return, it is not there. That return is what they need to notify, saying the return along with the tax. What is the problem in saying you have anyway deferred your tax liability, defer the return? What is the difficulty? I don't see any difficulty at all. But again, the pain is in the drafting. It is in the drafting, right? Now, all these are for returns. Now, the second issue that I have here. All right, you gave staggered dates, some on 12th, some on 14th, some on 22nd, some on 24th. do whatever you want. That is well within your powers. Now, when you come to all of these notifications in a staggered manner and in the table that is given below, now all of this, look at this confusion. Look at the confusion that you have created here. If you are in Uttarakhand, this is your date. If you are in Jabalpur, that is your date. If you are in Ranchi, this is the date. If you are below 5 crore, this is the rate. If you are above 5 crore, this. What is the problem? Yeah, you are coming with 2 lakh crore package. Tell everybody file on 27th March, matter over. 27 June, matter over. Why do you want to have 9%? Why do you want? What sin has this 5 crore man committed above 5 crore? And what sin has this below 5 crore man committed? All are under lockdown. All of these people are facing the same trouble. All of them are having manufacturing difficulties. Now you are saying for one man, is it not discrimination? Joshi sir, can we not file a case for discrimination between a 5 crore man and a 4 crore 99 lakh man? If you are 4 crore 99, you get extra time. If you are 5 crore 5 lakhs, because Purohit sir, you have committed a sin of selling 5 lakhs extra. Therefore, you suffer it. You suffer these dates simply because you are 10 lakhs more. Is it not discrimination? Now, where is the law which allows you to give this? For the purpose of uniformity, you want to apply 164 or 168. It was for a class of dealers. Class is not turnover. Class, kind is turnover. The moment you say class, then it must be the granite dealers. Now, I don't know, leather suppliers, textile merchants, those are classes. These are kinds. I think the government should understand that there is a real issue insofar as this is concerned. Now, look at all those notifications. I don't know how many of you paid attention to this. Pankaj, I know I have hit 12:15, but give me just 5 minutes. I will close.
Okay, continue.
Two more slides.
Yeah, continue.
Purohit sir, just go to that notification and see. What does that notification say? It says, if the principal place of business is in Karnataka, then you are 22nd. Then you are 22nd. Just a date. Just giving you a date. Whereas, if your head office is in Mumbai, Reliance head office is in Mumbai, but principal place of business is in Bangalore, he gets 2 days extra. Be careful. And he gets 1 month extra to file the return. Otherwise, no. Now, what is this principal place? Is this principal place of business the principal place of business in the registration certificate, or the principal place of business where the manufacturing plant is located? Notification does not answer these questions. It doesn't answer these questions. They have simply blindly given one notification. Now, if you go back to the definition and see, principal place of business is the principal place of business listed in the registration certificate. Now, Reliance, it is having 152 plants and warehouses across India. Its principal place of business is Mumbai. Therefore, he won't get the benefit of extended date. He won't get. He has to file earlier. Although his plant is under lockout in Guwahati, he has to file his return before the due date that is specified, which is the earliest of the 3. Now, please be careful. These are small issues that you will have to take up. Now, look at this 10% business. Section 36, I'm sorry, Rule 36, Sub-Rule 4. Earlier in October when they came, they said 20% of input tax that I will disallow if your 2A does not reconcile with books of accounts. Then from January 1st, they made this 10%. Now they are saying from February to August, no problem, you claim full input tax credit, but in September return, you apply this 10%. I think this government is out of its head. There is something wrong with it. The pain that we have to go to apply this, because Rule 44 contemplates a 20% deduction if you don't file your return. Even in these troubled times, does government want to go with it? Can they not do away with this Rule 36, Sub-Rule 4? You have assessment, you have audit, you have inspection, you have search, you have everything in your hand. For a handful of fellows who are black sheep in this entire business, you want to create a pain for the entire practitioner fraternity and the business fraternity. Who is going to do this reconciliation on a day-to-day basis? Please tell me. For 6 months. Now it is spread over 2 financial years. Joshi sir, look at the difficulty. It is spread over 2 financial years. February and March is in financial year 1920. April, May, June, July, August is in the subsequent year. Now in September, if you have to reconcile, Purohit sir, you will be sweating because it relates to 2 years. You have to technically take 1920, 2021 up to September, 18 months you have to reconcile. Which man is going to pay you 5 rupees fees? Nobody will pay you 5 rupees fees. And because you are permitted to claim full input tax credit in April, May, June, July, August, no businessman is going to see 2A. Who is going to download 2A up to 30th April, 30th May? Because books will be different from portal. Portal will get clubbed together. The balance credit will be shown as credit lying in the ledger. How to reconcile this? Are these people applying their minds for the clerical work that we will have to do subsequently for a few crores that we are going to pay by way of interest? Because that credit will anyway come. A man who is a fraud will commit a fraud. A man who is going to get the credit is only a matter of time. What is the government up to? I don't know what they are up to in this Troubleton. Fearless, I will skip this. It is a very simple issue. Enforce is the owner's share of construction, which I've already discussed. Joshi sir, please pay some attention in respect of real estate transactions. I am taking a position in Bangalore that on development rights, I am not paying any tax. I am not paying any tax because the mechanism for computation fails. 4/2018 was the first notification that came. 4/2018 does not talk of the mechanism of computation. It says the person who is liable to tax. It talks about the taxable event. Please, the 4 pillars of taxation. Person who is liable to tax, it says. The event, it says. The event, it says. The transaction, it says. The transaction, which is a subject matter of levy. Person, event, transaction, computation fails. If the computation fails, I will apply S.K. Bansal's case, Delhi High Court, and B.C. Srinivasa Setty's case, Supreme Court, to say where a mechanism of computation fails, there can be no levy. 4/2018 came on 25th of January 2018. Therefore, prior to that, the government had no intention to levy tax on development rights. That is the argument that I will take. The first point that the government wanted to levy tax on development rights came into the statute book on 25/1. On 25/1, there was no mechanism. Prior to that, if Purohit sir wants to argue with me, Pankaj sir, 2 minutes, Pankaj sir, ho gaya.
We are almost.
Only 1 minute. Only 1 minute.
Sir. Okay, sir.
Purohit sir, consider my example. Consider this example. If you are saying prior to 25/1, I am the commissioner, I will tax you at the rate of 18% under residual entry. Agreed. Then why did you bring this notification? There was no need for notification. Tell you who is liable to tax, when he is liable to tax, what is the transaction that I am liable to tax. Then there was no levy earlier. There was no levy earlier. You cannot take me to the residual entry because the taxable event you are determining only on 25/1. The event you are determining on 25/1. The mechanism you are not determining on 25/1. Therefore, there will be no liability to tax. The government quickly realized this. On 30/9/2019, they withdrew this notification. They withdrew this notification with retrospective effect from 1/4. Look at the mess that the government creates. They withdrew this notification with retrospective effect from 1/4/2019. That means this notification which is on your screen, the statute book from 25/1 to 31/3/2019. From 1/4 it was retrospectively withdrawn. Retrospectively withdrawn when? In September. Then what happens to Ganesh Purohit sir? If he has entered into a transaction between April to September, he is finished. He is finished. This is what the government does. I am taking a position in Bangalore. Development rights, I am not paying tax. RMZ has filed. For those of you who are interested, RMZ has filed 3 writ petitions in Hyderabad. I think it is Telangana, if I'm right. 1 on development rights, 2nd on subcontract services, 3rd on input 17(5)(c), 17(5)(d) and input tax. All the 3 have been admitted. It was listed for hearing on April 6th. Unfortunately, due to COVID, it has gone somewhere else. This is the gist of taxability of transactions on development rights. Please read it. whenever you have time. So the last issue on interest, I will close with that interest. Purohit sir, I am with you on interest. I am in full agreement of what you said. Interest will kick off only when you have not paid the tax legally due to the government. If the credit is available on the portal, my money is already there. Therefore, there can be no interest. I agree with you that while the Honorable Finance Minister made an announcement saying interest is payable only on the cash portion, which you have withheld, it is compensating in nature. Government money you have had, yes, you please pay interest at whatever rate. So it is only on cash. But notices have been coming on net, grass, call it by whatever name, you have notices all the while. I am on cash payment. If the difference is paid in cash, please pay interest. If there is no cash payment, no interest, period, stop. I am going to fight that, however. Thank you so much, AIFTP Central Zone. Thank you so much, CRC. Thank you, Pankaj, for having given me an extra time of 25 minutes. I'm so sorry I had to extend this time. I've extensively used my past president's names, Purohit sir and Joshi sir. Pankaj sir, I've used your name also. I have no offense meant. I know I have drawn the department into controversy, but I have no intention either to hurt the department or the associate. It is only the passion for love. Thank you so much. Thank you all for having given me this.
Thank you, Venkatramani ji. It was a wonderful presentation, and it was really wonderful that almost all 500 participants were throughout your lecture. And I would request you first to stop sharing the screen. Now you are on the full screen, the speaker screen, and we are all grateful to you. It was a wonderful lecture. Friends, before starting the question answer session, I would once again remind you that tomorrow there is a paper, there is a webinar on Companies Act, LLP and Insolvency and Banking Code by Shri Anil Mathur, Chartered Accountant from Jaipur, a very learned speaker again, and he would be covering various topics including the Fresh Start Scheme, LLP Resolution Scheme, IBC matters and other things. Again, that same time would be there and the same login code would be there. I would open the mic only for 2 minutes to Ganesh Purohit ji to say his chairman comment and in brief, and then we would open the platform for the queries. I had some raised hands in my computer. I would start with the raised hands and then I would open the mic for all the persons. Shri Ganesh Purohit sir, open.
Yes, sir.
Yes, sir. Please go on with the chairman comments.
Thank you, Pankaj ji, and thank you, Mr. Venkatramani. You gave a very, very exhaustive and a very lucid speech on your many of the controversies.
Thank you.
You know, Mr. Venkatramani, that I am basically a income tax man, and I am not dealing with GST except in the High Court. But I am enlightened by your wonderful discourse on this GST issues, and I have learned a lot. There is no hesitation in saying that I have learned a lot today from your speech. And many of the issues which you have brought in are really, really very, very important. As you said that the and and or cannot be interchangeable because one is used for disjunctive purposes.
Correct.
And the and is used for cogentive. You have to bring together two things, then you say and. When you have to divide the two things, then you say or. And as you rightly said that at many places in the law, and or are simultaneously used. If they say and oblique or, then it is different.
Correct.
So this all three connotes entirely different meaning. And in the principle of interpretation, they have been recognized as, or is recognized as a disjunctive word to be used. But I would also thank you on my behalf and on behalf of the IFTP and especially the Central Zone for giving your valuable time, for the wonderful explanations and controversies, real controversies, and really very lucid explanation. So on behalf of all, I thank you and I hand over the mic to
Thank you, sir.
Pankaj.
Now I would open the mic of Mr. Navneet Arora for the query. Mr. Navneet Arora.
Thank you. Yeah, please. Thank you, sir.
Yes,
sir. My question is this. Can the department demand interest on delayed payment without issuing the show cause notice? And what is the main ingredients of that show cause notice? And what is the time limit to issue that show cause notice?
Okay. Now, interest cannot be demanded without issue of show cause notice. Interest has to be computed by the department with proper workings, and a notice under section 73 read with section 50 has to be issued to you. So there are two stages which the government has to go through. One is what we call as a pre-show cause. A pre-show cause notice is a normal notice that they will issue to say this is the interest that you have to pay. If you have any objections, kindly revert within a period of 30 days. If there is no letter that goes to you, he will confirm the order, interest becomes payable, liable to tax. If you object to it, then he has to give you a normal show cause notice under 73 saying your interpretation of interest is wrong. Take this notice under 73, come back to me and reply. Based on that, he will confirm the order under section 50. Now, for the purpose of time limit of interest, to my mind, there is no time limit because there is a delay in payment of tax. If there is a real delay in payment of tax, it goes up to the stage of assessment. Technically, they have got 5 years from the end of the due date of annual return for the purpose of levy of interest. Interest should be by virtue of a show cause notice. They cannot directly attach bank accounts. If they have, please go to the court directly. Next.
Thank you, sir.
Okay. Mr. Ashwin Tanna.
Yes, sir.
Yes.
Sir, I just wanted to have a comment by PC Joshi somewhere.
Yes.
Please, sir.
Okay.
Because
I would open the mic after some queries for it.
No issue, sir. That was the only suggestion, sir. That's all.
Thank you. Mr. Srinivas Sarma. Mr. Srinivas Sarma. Okay, he is not there. Then Mr. Pramod Batra. Mr. Pramod Batra. Mr. Pramod Batra, are you there? Okay, next we move on to Chandravaru Dash. Chandravaru Dash.
Hello.
Yeah, Mr. Chandravaru.
Yes, I am from Raukla. I thanked you and the
query, please, directly.
Thanks.
The query.
Okay.
Ankit Totuka. Ankit Totuka.
Sir, my query is with regard to the job work. In case of job work, if the process amounts to manufacture,
Yes.
then the rate of taxation would be 18%. And if
Yes.
it
Yes.
is 12%, right? This is the
Yes. Please be careful. Now that is where the entire litigation will hinge, Ankit. You have to analyze whether it is a transaction of process or whether it is a transaction of manufacture. First, you understand whether there is a process or manufacture. If it is manufacture, it is going to be 18. If it is process, it will go to 12. Yes.
Mr. Suresh Agarwala. Suresh Agarwala. Mr. Nagesh. Mr. Nagesh. Mr. Shiv Kumar Sellakari. Mr. Shiv Kumar Sellakari.
Nagesh is there.
Mr. Shiv Kumar Sellakari. Okay. Then we have KC Agarwal. KC. Mr. Yogesh Sethia.
Yes, sir.
Yogesh
Hello.
Sethia.
Yes, sir. Hello.
Yes.
Sir, my question is if a owner of plot develops the plot, for example, roads, drainages, gardens, and then he sells the plot in pieces, whether GST is chargeable to that transaction?
Yeah. Yogesh, please understand this very carefully. If you are the landowner, you are
Yes, sir.
this piece of land into sites, then culverts, bridges, etc. goes to the appropriate local government. If you are selling this land to, let's say, Pankaj Gaya, sir, there will be no liability to tax provided you
Yes, sir.
sell it as sale of land. But if you collect the consideration in two parts, one for development or development charges and the second
Yes.
portion towards sale of land, then it will be liable. The development charges that you collect will be liable to tax. Corresponding input tax credit will be available. But if you collect it as sale of land, you have to pay stamp duty full value. Next.
Mr. Rohit Patodi. Mr. Rohit Patodi.
Hello.
Yes,
Yeah,
Rohit.
yeah, go
Sir.
ahead.
Yes, sir. Actually, I have a query regarding the participation of association. For example, if an association is organizing a seminar, it includes club members also, it includes non-members also, and they are charging a fees. So
Yes.
whether the fees charges collected from the non-members are liable to GST, and whether the association need to require a GST registration or not.
I am taking the considered view. I am taking the considered view. I would like to hear Joshi sir's comments later. I am taking the considered view that whether you are a member or you are a non-member, in a GST regime, you are liable to tax. You are liable to tax. Therefore, whether it is from members or non-members, you have to pay your tax. This is the opinion I have given to my CA institute also. Next.
Mr. Tushar Dingada.
थैंक यू सर. सर माय क्वेरी इज फॉर एग्जांपल अगर किसी डायरेक्टर का कोई रेस्टोरेंट है और वो कंपनी में वहाँ से रेस्टोरेंट से फूड जा रहा है, देन वेदर इट विल आल्सो बी लायबल टू रिवर्स चार्ज.
कंपनी में रेस्टोरेंट से फूड जा रहा है
और डायरेक्टर का रेस्टोरेंट है, डायरेक्टर इज अ प्रोप्राइटर.
डायरेक्टर का रेस्टोरेंट है, डायरेक्टर इज अ प्रोप्राइटर. Oh, okay. So these are related party transactions. One is it will be a subject matter of valuation, which definitely it is liable to tax. You will have to go on estimates basis and by applying Rule 31, like kind, like quality at about the same time, pay tax.
Mr. Santosh Gupta.
Venkatramani ji.
Santosh ji, namaste.
Namaskar. Whether AIFTP will be liable to pay tax on the delegate fees received or the seminars?
Yes, yes, it is liable. Yes, it is liable.
Okay, Mr. Fasluddin.
Sir, this your explanation more I need for this medical equipment. That's you may go to composite supply, just like a car plus warranty received. I want to know little more explanation through this web or
Fasluddin,
any other
sir,
web.
you are not from Abbott, no?
Sir, please.
You are not from Abbott, no?
No, I am from Kerala.
Kerala, but not Abbott.
Advocate.
Okay.
He is an advocate.
Advocate,
okay.
Sir.
He is an advocate. First class. Now let
Sir.
me give you this example.
Sir.
The Advanced Ruling Authority in Kerala said,
Yes, sir.
sell medical equipment free.
Sir.
Free. Sell the equipment free. Give it free.
Sir.
To a person who is not related, but you force him to buy reagents, chemicals, consumables from you for a period of 3 years, 4 years, 5 years, whatever.
Sir.
Then transaction relating to issue of medical equipment free is not liable to tax. But the transaction related to supply of reagents, chemicals, consumables is liable to tax. Right? So there are two transactions. One is medical equipment, the second is consumables. Consumables taxable, medical equipment not taxable because it is given free, the recipient is not related party.
Yeah, right.
Second,
Sir.
you want to give medical equipment plus consumables at a fixed price. Please be careful. Medical equipment plus consumables at a fixed price. 5 years, you say, all these chemicals I will supply, but 2 crores is the price for the medical equipment. So you have included the consumables, reagents, chemicals, etc. there. The question is whether this is a composite supply or a principal supply. I am taking a view that this is a principal supply of medical equipment because with medical equipment there can be no consumables or reagents.
Right.
Andhra Advanced Ruling has slightly held different. So it is a principal supply of medical equipment liable to tax at 12%.
12% only.
Mr. Jaya Raju.
Can be
Mr. Jaya Raju. Mr. Jaya Raju. Okay, Nitin Shah.
Sir, my query is under GST works contract confines only to immovable property. Is the understanding correct?
Yes, it is correct. It is correct. Provided, be careful, even plant and machinery can attain the characteristic feature of an immovable property under certain circumstances.
Mr. Satish Shukla. Mr. Satish Shukla.
जी हेलो सर.
Yes.
सर नमस्कार सर.
नमस्कार.
सर मेरी जी सर, क्वेरी मेरी ये है सर कि एक जो ये इंसेंटिव मिलता है सर डिस्ट्रीब्यूटर को कंपनी में टारगेट अचीव करने का, डिस्काउंट का एक साथ मिलता है, तो क्या ये भी जीएसटी के दायरे में रहेगा सर?
Pankaj, just explain that, Pankaj, to me.
They get incentive from the companies.
Okay.
That is post-sale incentives, volume discount and turnover discounts and all.
Okay. Satish ji, first, your job is to make it clear. My English में बोलता हूँ, Pankaj ji will translate to you. Pankaj ji has to check whether this is price protection or discount or incentive. Please be careful. Some companies pass price protection. Now, what is price protection? I will force you to sell iPhone at 60,000 rupees and give you an incentive of 18,000. If it is price protection, rate applicable is rate applicable to the product. If it is target discount, no credit note, not liable to tax. If it is incentive, it becomes a service liable to tax at the rate of 18%.
I think it is clear.
Yes, sir.
Yeah.
One more query can I ask?
Later on. Mr. Sankalp. Mr. Sankalp.
Sir, I have a query that in case of pilai of sarson, whether it will be covered under 5% or job work of agricultural produce, or it will be covered under 18%.
I am saying residual entry 9997 at the rate of 18%.
Okay.
Okay. Thank you, sir.
Mr. Rajesh BL.
Sir, can I speak, sir?
Yeah, go on, please.
My question regarding section 16(4), eligibility of ITC.
Yes.
Sir, can I tell ITC for the year 18-19 while I am filing the returns now? Is there any supporting case decisions regarding that?
Rajesh, be very careful.
Yeah, sir.
If you are including 18-19 turnover, be very careful. If you are including 18-19 turnover in 19-20 returns, please be careful. 19-23, you cannot claim input tax credit of 19-20 to set off 18-19 liability. You have to pay tax.
Okay.
You can't set off future credit against past liability. Pankaj ji, you might have to explain in a little.
Yeah, I would, but let's move on first. Piyush Singhal. Mr. Piyush Singhal.
Thank you.
Sir, I have purchased a truck, and a truck is used for transportation of concrete. Sir, whether what would be the tax rate? Because transportation and concrete, two services are involved. And should I claim the ITC of the truck or not?
You are an RMC, is it? Ready mix concrete.
Sir.
Ready mix concrete, right?
Yes, sir.
Okay.
5% was the rate.
I will be fast. You please catch up with me. There are three transactions. You first need to analyze whether your lease, you are hire, or whether you are transportation. Lease is a transaction where possession is given to the customer without driver. Hire is a transaction where you give it with driver to move goods from point A to point B. Transportation is an arrangement between two people for transport of goods from A point to B point. I don't know how you have framed your agreement. In all probability, if it is truck with driver only for the purpose of transportation, you will be transportation services. You will not be hiring. You can't fall under 12. You will be 18%, and therefore you will have to issue consignment note. Input available.
Mr. Manoj Agarwal, GST Sathi.
Yeah, hello.
Yes.
Sir, regarding royalty, you referred to the Goa bench judgment of Bombay High Court.
Yes.
So can we rely on that judgment relating to service tax, because the definition of services was different, and in GST the services definition is anything other than goods. The definition of business is also very broad, and supply definition is also very broad, sir.
Okay. Now, Manoj, look at it like this. Do you agree with me that there is no in a transaction of royalty? If you agree with me that there is no service rendered in a transaction of royalty, there will be no liability to tax. What is royalty? Royalty is a tax for having exploited Mother Earth by this man. It is a tax that he pays. Please go to the Mines and Minerals Act, where they say it is a levy. The moment it becomes a levy, it is a tax. Therefore, in my view, there can be no tax on tax. Next. Thank you.
Mr. Purna Ota. Mr. Purna Ota.
Hello.
Yes. Yes, Mr. Ota.
Sir, namaste. Myself, PC Ota. Sir, my question is, I am a contractor and I also start a manufacturing PHU plant to my same number. Can I require a new number for registration?
No, if you are doing it as a part and parcel of the same business as a proprietor or as a partnership firm, no new number. You have to take branch registration if it is in a different place of business. Otherwise, you can continue to do business in the same premises if it is there under the same number. No difficulty. Next.
Mr. Bhavin Mehta.
Yes, sir.
Yes,
Hello.
go. Yeah, go on.
Yes,
Yeah.
Bhavin.
Yes, sir. So, due to this COVID-19, the hotel has been taken over by the by the municipal authorities. Now, certain of the hotel assets are being used by the municipal authorities, which would be ultimately thrown away by the hotel.
Correct.
Now, whether ITC would be admissible in this case?
In my view, input tax credit is not available because it is destroyed. Section 17, subsection 5 will come into operation where goods are destroyed. Pro rata input tax credit is ought to be reversed. I think AIFTP can take up this. I raised this issue in some other seminar. I think Gaurav Gupta's seminar. Please take up this issue where hotels, not just hotels, Kalyana Mandap are taken over. Input tax credit cannot be denied. Next.
Ashutosh Sharma.
Hello.
Ashutosh Sharma.
Good afternoon, sir.
Good afternoon.
Yes, go.
Sir, I have a general query regarding audit of 2018-19. Sir, in that, are we required to inland verify e-bills?
You are required to clarify?
Are we required to verify all the e-bills?
Pankaj, what's the question, Pankaj?
He's saying that he has utilized e-way bills. And do we require to link e-way bills with the purchases, or only the purchases he has to see and do not have to verify e-way bills?
If you are a chartered accountant or company secretary certifying 9C, it is your duty to verify e-way bills. Please don't discount that. The reasons are many. I don't have time. I will explain that later. If you, Manoj can, Pankaj can share my email ID. I will send you a note.
Yes. Chinnaswamy Saudagar.
Sir, good afternoon. My query is regarding this interest. Actually, my client is the contractor. He has paid 90% of the liability on 15th of every month. He will pay only balance amount somewhere in 21st and 22nd. Now the department has sent a letter to the bankers directly attaching interest liability, where I have paid maximum amount 15th, not even 20th. 15th they used to pay. Only little bit amount they are paying a bit later by 21st or 22nd. Now they are sending a letter directly. They send one letter by email which you are not seen. Then second they have attached the bank attachment. Now we don't have any money in the bank. But going to come the particular account, the bank manager is put some package in that bank account. We are saying that whether the money is going to debit, or once if we debited, what should we do?
See, there are two cases. One, because the attachment is already there, any money going to the bank will go. I think you need to move the High Court, but now.
Hello. Hello.
Hello.
Hello. Venkatji, your mic has gone. Hello. I think Mr. Venkat has gone offline. Hello. Yeah, I think Mr. Venkat has gone offline. So, friends, we don't have time now. We will have to end this time because it is already 12:47. We are already 2 hours for the seminar in place of 1. I thank you all, and we will continue with the queries. We can have a repeat session later on, but we will continue with the queries later on. And if demand there, we can have a repeat session of Mr. Venkat after some time. Thank you all, and I request you again to join tomorrow. We will try to give the answers, and we will share the PPT in the groups, various groups which we are circulating the information. Again, a request, please join tomorrow meeting at same time, same login ID, meeting number, and same thing. And with this, I think I conclude this webinar for today. Thank you, everybody. Thank you. Bye-bye. Thank you. Bye-bye.